Information shared on the following program is for general information purposes only. It does not constitute legal, tax, investment, or other advice, nor is it intended to recommend any particular investments, products, or financial instruments. Always seek advice from your financial advisor, attorney, or accountant with regard to investment, legal, or tax questions.
Welcome to the only show in the country dedicated to helping savers worry less about money, the Worry-Free Retirement, with your host, retirement specialist and six-time author and fiduciary, Tony Walker.
Two of the most important yet seemingly unimportant words in the planning of one's retirement are these two, the words may and shall. So what is the difference, and why would a little man in a sweater vest dedicate an entire show to these two simple little words? Well, when it comes to planning for what I refer to as the second half of life, that period of one's life in whereby you should be relaxing and enjoying the fruits of your labor and not worrying about what will happen to those fruits as you age, and of course eventually pass away, what my experience in the financial trenches these past 40 years has taught me is this. There is a huge difference between the worries of the mays brought on by the world and the certainty of the shall that all savers must consider and plan for as best they can. To separate these two words and to create a written game plan to identify how to approach them is truly the key to a worry-free retirement. In fact, making a distinction between these two words in the planning process of retirement planning led me to this game-changing book on retirement and the perspective we should all consider on money in life. That's right, live well, die broke. So what are the mays, and consider dropping off the worry list, versus the shalls that you and I will need to address? Well, let's get started and find out exactly what the difference between these two words is. Okay, well, welcome, folks, to the Worry-Free Retirement. And yes, I am that little man in the sweater vest, retirement planning specialist and full-time fiduciary, Tony Walker. And today, assuming you are retired and moving into what I refer to as the second half of life, or maybe you are that adult child watching today's program who has parents in this stage of life, then knowing what truly matters in retirement and what to worry about and what not to worry about is something foreign to most in the financial world. As we will discuss in the next segment, there's a big old financial world out there touting big old things you are supposed to be worried about when it comes to what to do with your money and who you should trust to invest it with. In dealing with thousands of savers and their worries over money, this is what savers are telling me when we meet for the first time. It is very difficult to find someone they can trust with their life savings, especially as they enter into this second half of life. To their surprise, the reason I tell them why this task of trusting others is so difficult is since most advisors and financial companies have what I call a conflict of interest to handle the money in the first place. The reason? OPM, or what's known as other people's money. OPM simply means that without your money, we in the financial world, yes, that includes a little man in a sweater vest, are out of business. Oh, speaking of OPM, I had a prospective client in yesterday who's approaching the second half of their life and in the throes of shopping for a new advisor. When I asked him his thoughts on the process of finding someone they could trust with their life savings, he responded this way: I don't really understand how all these people out there make money on my money, which I responded, well, sir, if you want to know the truth, we in the financial world are useless without your money. He laughed and said, I just can't believe you called yourself useless. To which I responded, that is the truth. It isn't me and the rest of the financial world who have worked and slaved away to earn all this money. It's you. We in the financial world do not bring anything to the table of value unless we can help you accomplish your retirement goals. That's pretty much it. But here's the thing most in the financial world soon forget after they do get your money. These folks, in many cases, begin to think your money becomes their money. Don't believe me? Just think long and hard about an advisor or some big financial institution who's concentrating in getting as much money as they can, and they don't seem that interested in getting you your own money back at the least amount of cost and the least amount of taxes. It probably hasn't happened. So yes, at Tony Walker Financial, we are no different than the rest of the folks scrambling for your money. We too must rely on OPM to stay in business. But here's the difference between us and them. We never forget that this is your money, not ours. It's your money, and it's our job to invest it properly and, more importantly, to set up a game plan that will help you meet your goals and help you worry less about money in the future. Because let's face it, if I didn't think we could pull that off and become one of the best at what we do in the industry, I'd get out of the business. So how do we at Tony Walker Financial stay focused on dealing with the maze and keep hearing from the financial world and all the maze that may come up, and instead focus on the shells, the things that you really do need to be focused on to be worry-free? Well, when I return, we're going to have a special guest in the studio, and we're going to explore a recent survey by a financial institution that talks about the maze versus the shells and what you need to be worried about. I'm Tony Walker. Stay tuned. We'll be right back. Having worked in the retirement planning field for 40 years, I know it's not just about how much money you've saved for retirement, but making sure you one day don't run out of money. That's where mailbox money comes in.
Mailbox money!
A reliable, lifelong income, much like the pension plans from the past. If you're interested in turning your 401k into mailbox money, let's talk. Just set up your free 10-minute phone call with myself at TonyWalkerFinancial.com. That's TonyWalkerFinancial.com. Welcome back to the Worry-Free Retirement, and with us in the studios is my favorite son-in-law, fellow fiduciary, Mr. Trey Juergens. Trey, thank you for joining us this morning.
Thanks for having me.
We've been working on this together, but this may versus shall, I've already done a monologue and leading up to this, and I think what prompted me to come up with the mays versus the shells is really how much information is out there in the financial world on this thing called retirement planning, something we've done for over 20 years, but what a hot topic retirement planning has become. I mean, what is really going out there? What are we seeing in the world and all the different, I guess, mediums and different ways people are getting approached about retirement?
Well, it's follow the money. There's so many people turning 65 every day in the United States that a lot of advisors are kind of shifting to follow those funds. It's the 401ks, the pensions, all that money that's available by those folks heading into retirement.
And I agree with you. It's not just advisors, but I think really the financial world's jumping in. In fact, this survey you recently stumbled across, really interesting, talking, was it Lincoln Financial?
It was Jackson.
Jackson. Okay, Jackson, which was a pretty good survey, but 10, 15 years ago, I never saw any surveys about retirement and articles like this. Let's start off with this one here. That's kind of interesting. I know people out there are worried about long-term care, and this is a may. You may never go into a nursing home. I had a father, unfortunately, that did, but it is a true worry. So let's talk about this particular article.
Yes, this article was really a longevity study, and it's an insurance company. Obviously, the annuity popularity is booming right now, but this was really to look at the mays versus shalls. Are savers overestimating or underestimating in saving for retirement? And what we found out, they're doing both. They're underestimating the cost of health care. However, the cost of health care and long-term care needs is a may. The shall is that you definitely need money for retirement, but some people are astronomically overestimating how much they actually need to save.
Yeah, let's go to this next article here. Derek's at the helm there. I've never seen this before, but, I guess it kind of makes sense. We meet with so many clients. They're getting ready to retire in many cases. They don't know how much money they're supposed to save, but let's do the quick math. It says 6 in 10 people think they need to save 30 annual salaries for retirement. So let's add that up, Trey. So if I'm making $100,000 a year, that means at retirement I'm supposed to have $3 million saved. How many people do we have that have $3 million or even close to that?
Maybe one or two. That's it.
Yeah, so why do you think that is? Why do you think people, savers, think they need that much money?
Well, the financial world's telling them that. I think the two scare tactics, not that they're not important, is the cost of health care, long-term care, but also inflation. And what if you run out of money? What if the market goes down? The financial world's really scared savers into thinking, I mean, this is an absurd number to think, but they're really kind of overestimating what they think they actually need.
So it proves the point that the poor saver out there, they're the one that came up with the number, because I've never seen this actually from the financial world itself. But if I'm a saver and I don't understand it, I keep hearing about inflation and taxes and all that, I guess in your mind, you just think you need that much money. And then I know you've got some bullet points, but one more article, which leads to our next point. Jackson National, or any of these companies, I saw Prudential's really jumping on this too. What is leading to this huge growth in the sale of annuities? Because this is a big number. If you told me 20 years ago this many annuities would be sold, I'd say you're crazy. So what's going on here?
Well, there's a huge boom in annuity sales. It's up 12% total from last year. Last year was also a record-breaking year over the year prior. Annuities are booming, 31% increase in fixed indexed annuities. A lot of these being indexed annuities with income riders, guaranteed lifetime income, mailbox money. So the demand that savers are showing the financial world, they're looking for guaranteed lifetime income.
And I was going to say, I think about a documentary I did years ago called Say Goodbye to Granddad's Retirement, which was so fun to put together. A gentleman came in just yesterday and we were talking about it, and he had read about my granddad. And he said, that mailbox money thing, is he the one that came up with that? I said, it's true. When I used to ride with him, the little Volkswagen, this was back in the 70s, early 80s, he'd literally go to the mailbox, pull it open, and he'd laugh. And I heard him quip once, well, there's my mailbox money, because back then he had his pension and Social Security. So I got to thinking about all these surveys and all the savers we meet and the worries. I do not recall my granddad ever worried about money. Now, granted, his health insurance was taken care of by Bell South, but this mailbox money and annuities, so speak to the shells then. I think if we take a glimpse back to Granddad, he wanted that mailbox money, he had it. All he had to do is just make sure he didn't spend more than what was coming in. So speak to the way we position these annuities, Trey, and what we're doing and kind of ahead of the curve on this.
Well, when you lay out a retirement game plan that you can guarantee someone is to not run out of money, it really gives you a lot of flexibility on the front end. They may want to take some trips here and there. They may want to see what they're able to pull out of the Charles Schwab on the front end. But when they know they're not going to run out of money, and sometimes they're going to have as much money as they were living on while they were working on the back end, it just gives them some wiggle room and flexibility to enjoy money when they can actually enjoy it.
That's well said. And in fact, our philosophy is so different. We talk about the three halves of life, and in that second half, we intentionally show people that you actually want money going down. To leave all this money behind, whether it's taxable or the nursing homes come after it, it doesn't make any sense. And again, back to Granddad's day, when he eventually passed away, he never ran out of money, but he really didn't have that much money. And in some ways, the stewardship of the money, the ability to enjoy it, give a little bit to his family, his kids who he helped, I think, and that's the way I kind of want to go at it. I mean, it's nice. I've got some money, but sometimes all this money just brings on more worries. And I think we're addressing that well with the live well, die broke concept.
Oh, absolutely.
And speaking of this article, really when you boil it down, Trey, we meet so many people who are retired in the second half of life. What are your two options?
Well, the two options really, it's stockpile money away to either be able to afford long-term care insurance, which is becoming harder and harder to get, or self-insuring, which is having all the funds to be able to pay for your care. Or on the other end is spending down your assets, looking to qualify for Medicaid, which at this point, 60% of investors are looking to use this strategy, just knowing how hard it's going to be to keep up with costs.
And the spend down could include, I know, the popularity of maybe elder care attorneys getting involved in how to understand those complicated Medicaid laws, which in some cases we will refer people to an elder care specialist for that very reason.
Exactly right.
All right, close us out on this subject here, Trey. How do we at Tony Walker Financial help these clients get more zeroed in on what may happen versus what shall happen?
Well, the value in how many savers we get to see life play out. We get to see these game plans that we put in place play out. And what we're seeing in this study, savers are overestimating what they need to save. They're underestimating the cost of insurance or cost of health care. But if they have a game plan that really just takes into account what they need, not everybody in the world needs for retirement planning, it allows us to give them a game plan that's laid out for them.
Oh, well said. Well, very good. We got running out of time in the segment. Thank you for your time, Trey. Folks, we'll be right back. Have you recently retired, been laid off, or offered a buyout? Has the company you work for moved, been acquired, or closed its doors forever? And finally, do you have a 401k with a previous employer you'd like to move to safer territory? Then take advantage of this opportunity to move your 401k or lump sum pension to Tony Walker Financial. Let's meet in person to discuss your retirement options. Log on now to TonyWalkerFinancial.com to schedule your free, no-obligation appointment. Let us help you today. Welcome back to the Worry-Free Retirement. Tony Walker here, and in the studios we have three of our service professionals, mainly in the Charles Schwab platform, but also in what we call the onboarding process. We've talked before about what happens when somebody rolls the 401k plan over, but people forget sometimes that we are a planning firm. The plan dictates everything we're going to do, but sometimes to people's, I don't know if it's surprise or they get a little apprehensive, we like to make sure we confirm all these values. We call this an eligibility call. So sometimes, Craig, I'll bring somebody by or you'll call them out of the blue and I've asked for an eligibility call. What is an eligibility call? And why should people understand why this is so important to do the eligibility call before we start moving money around?
I can give you an example from my own life. I rolled over my own funds.
To us, I hope.
Yes.
And
just a few months ago, and then found out that I had pre-tax, after-tax, and Roth funds, and I didn't realize that. So sometimes there will be a different mix of funds, and so we might need different receiving accounts on this side. But then also, maybe if their employer has been matching a certain amount, but those funds may not be available until after they've completely retired or separated. Maybe they were at a previous employer and they see an amount on their statement, but they're not 100% vested. So they don't actually have access to 100% of what shows on the statement. So it helps the income planning department know exactly what we're dealing with when those things come over. But yeah, sometimes early on, especially social security numbers and some of those things, people are a little bit reluctant to share that information over the phone.
I think we were just talking about that before we went on, Beth. You said sometimes people come in and maybe we can't get to them right away and they're ready to move forward. So I said, well, I'll just have Beth give you a call. The types of information we need are pretty sensitive. How do you deal with that over the phone if somebody's a little hesitant to share social security numbers and things like that?
Occasionally, if I call them, they'll choose to call back in so that they know they're calling actually into the office for Tony Walker Financial, or they will actually schedule an appointment just to come in and do it in person.
That is a good point. Do you even, I guess I've never asked you that, do you tell people that up front? Let's say you're just calling them out of the blue, even though I might have mentioned your name. Yeah, anymore, who knows who's calling you? So how do you address that right up front? So they get a blind call from you because you got to have your social security numbers and all this detailed information on their kids. Let's say they're trying to list their beneficiaries. How do you handle that call?
I usually just announce who I am, why I'm calling, and let them know that they've been speaking with either Heather, Trey, or yourself, and that you've asked me to give them a call and reach out and get the information, ask if it's a good time, if they want me to call them back. If at that point they don't feel comfortable giving that information, I'll give them the option to call back into the office or schedule an appointment to come in and do it in person.
Oh, very good. That's good to know. And Juanita, I know you speak to this issue a lot, not only from security questions and things like that, but just why we need those statements and the exact numbers and pre-tax and after-tax and speaking to the income plans. I know you verify a lot of that. Could you speak to the importance of that information?
Well, there's two things, and I was thinking as Beth was sharing about the sensitivity of the protected information, the staff sheet that you try to provide always when they're in the office actually has a photo of who we are and gives our name. So by the time Beth is calling, they may already have that form on file so they can verify who we are when we're calling in. And we are spending a lot of time making sure that what we're doing is accurate and that our numbers are correct and valid and that the client understands what is moving and that we're verifying with them that they are confirming this is what they want to move. Sometimes it isn't 100%. Sometimes it's a partial move. And so it is important that we're verifying that. We spend a lot of time and then we relay that information if it's changed or updated to the planning department so they can once again update the plan and keep that current all the time.
And I appreciate your work so much. And I think sometimes I even forget as the owner of the company how vital it is that you all on the onboarding process are watching over that income plan. I think it's very important to get off on the right foot and make sure we have those numbers accurate. So thank you for all you do. Folks, we'll be right back.
Hello, my name is Mandy Houchins, and I'm the head of the service department here at Tony Walker Financial. A reminder that if you wish to elect joint income on your annuity so that your spouse can continue those lifetime income payments at your passing, then your primary beneficiary must be your spouse. This option is only available to your spouse. If at any point during the contract you change your primary beneficiary to someone other than your spouse, the joint option will no longer be available.
The individuals in this interview are uncompensated clients at the time of filming. Their opinions expressed were provided to Worry Free Productions for use as an advertisement by Tony Walker Financial. Please refer to Form CRS and Form ADV Part 2B Disclosure Brochure for information regarding the advisory services offered by Tony Walker Financial.
Our client spotlight today features Mr. Garrett Bates and Miss Melody Bates. And Bates, it's so good to have you with us, and thank you for joining us.
Oh, thank you, Tony.
It's an honor.
So first of all, tell us a little bit about what you did for a living. We'll start with you, Garrett.
Oh, I was do the corporate grind for 25 years in the healthcare industry and focused on helping the organization run more effectively.
And then yourself, Melanie.
I'm an artist professionally. I do commissioned portraits.
Wow. And I understand you had a very big honor. Tell us who you were recently commissioned to do a portrait of.
Oh, well, I was honored to be chosen to paint the official portrait of Governor Beshear.
And that is a beautiful portrait. It's something else. You've got to be proud of that.
Thank you. It was actually a dream of mine to paint a Kentucky governor, and couldn't have picked a better governor to be able to paint.
I'm so impressed.
Thank you. I will say, not too many people knew that I did that at the time. You were one of the very few that did, and that's because of a great relationship with you.
Well, that's awful nice of you to say. And so, Garrett, now you're not really, we were talking about this, you consider yourself retired, but not really. Tell us kind of what's going on in your life right now.
Well, we decided a long time ago that we wanted to do an early retirement at 55, which is now 8 years ago. And we had the vision, but we didn't have a plan that we knew how to execute, that we knew what to do with. And that's where we came across you, and what you spoke to us really kind of touched us in that we found your approach to be sound and biblical, and something that we could get behind. And so what it allowed us to do is to take this life that we wanted and to start it when we wanted to do it. And that really was, has been beneficial. And over these last 8 years, we can't say how happy we are that we have made that choice to move into this phase of life.
Tell us a little bit about the experience in working with the staff. I'm very proud of the staff and just how we run things here and the operation in general.
That level of quality service and just personal relationship has been, really part of the whole experience for these last really 9 years.
Well, I would just reiterate what I said earlier, in that, to walk into your office talking about finances, it's more than that. I wanted to share something that was really special that was going on in my life with you at the time. And you're a finance guy, but you're also developed that relationship. You've asked, you always ask us, what are we doing and what's up in life? And, it's just,
you make sure that the financial things match up to the things that we're trying to do.
Looking for an advisor you can trust? Schedule your free phone call with Tony at TonyWalkerFinancial.com or call 1-877-499-9255.
Looking to roll over your 401k? Then log on to TonyWalkerFinancial.com and learn just how easy it is to roll over and safeguard your 401k. Do it today.
Tony, I keep hearing the term fiduciary, and it's a relatively new term, at least to me. Can you explain what that is and why it's so important for folks to work with a fiduciary?
Well, actually, you're right. Fiduciary is a term you don't hear a lot. In the financial world, though, it's getting very, very popular because there are so many people giving financial advice now. So a fiduciary, by definition, simply means that someone is going to be working in your best interest, not theirs. The problem in the financial world, in order to transact business, to manage your money, for instance, you don't have to be a fiduciary by law. In other words, it's kind of odd, but you don't have to actually be held to a higher standard of working in someone's best interest. So we at Tony Walker Financial have volunteered, we have elected to become fiduciaries. We have the proper licensing. Besides myself, there are 3 other fiduciaries, and our job is to make sure that we are working in the client's best interest.
So give me an example of what a first meeting might look like if I'm a new client, I come into your office and I meet with you or one of your associates.
Yeah, a good way to tell if you're working with a fiduciary is how quickly are they moving you through the process. So for instance, at Tony Walker Financial, that first meeting, Diane, when we sit down, we're basically going to go over all of your information. That's all we do at the first meeting. We're collecting data. We're making sure we understand what it is you want and what you're trying to achieve. Then in almost all cases, we have a second appointment. Now during the second appointment is where we provide all of our findings, all of our assessment, and that information is confidential to you and personalized to you. Now here's the real thing that really surprises people. We generally don't ask people to buy anything after that second meeting unless they're ready to move forward. We encourage them to take their information home, study it, make sure they understand how we're paid, how much money we're going to make on the transaction if they move money over, and just make sure they have a real comfort level. So yes, in conclusion, Diane, you want to make sure you're working with a fiduciary. Recently, an article which appeared in Investment News dated January 27, 2025, really caught my attention. The headline reads as follows: 6 in 10 people think they need to save 30 annual salaries for retirement. Now, folks, I've never heard of a concept like this, and I'm not sure why savers think this much money is needed to save for retirement. In fact, with over 3,500 clients at Tony Walker Financial, we assume that the average person or household, let's say, makes $100,000 per year. So that means the average saver thinks they need 30 times 100. Folks, that is $3 million needed for retirement. And with the majority of our clients having nowhere near this kind of money, how in the world are we able to pull off a worry-free retirement for those savers? And why would these savers think they need so much money? The problem is the financial world and something we address all the time called OPM. You see, OPM, or other people's money, is a concept the financial world lives by. That's right, we need your money to make money on your money. Without it, kind of like Dracula, we die. So why would the financial world instill all of these crazy thoughts of inflation and living too long? They want you to have more and more money, and they don't want you to spend it. That's why people think they need all this money. So let's take a look at the different concepts that exist between what we call the worry-free retirement and the financial world. So the financial world, let's say you're age 65, first of all, they're assuming everybody lives to age 100 or whatever it is, and that could happen. And this is why we always instill that people with the worry-free retirement put in something we call
mailbox money.
Because the mailbox money makes sure you don't run out of money. But as we're getting ready to see in a minute, that's really not how retirement plays out. You don't literally save more and more money to combat inflation and long-term care and taxes. In fact, more and more money, I've found this doing for 40 years now, usually compounds the problems. I know it sounds counterintuitive, but believe me, the more money you have as you age, the more you're going to worry and the more fears that are created, whether it's fear of going into a nursing home, fear of this stuff being taxed to death when you die. So it makes no sense to just accumulating all this money. So what we did in the Worry-Free Retirement, this was years ago, and I covered this in my first book, The Worry-Free Retirement. Again, over 20 years ago, I started specializing in this. We created something called the 3 halves of life. And what's important is, during halftime, this is when you need to enjoy and spend some of this money. Notice if this represents your net worth, so to speak, we actually want that coming down. We don't want it going up. This is a philosophical difference, and we've proven that this is the way to handle money from the financial world. The financial world doesn't want to give this money back to you because that's less money for them. But you say, well, Tony, what about this fear of running out of money? I don't want to run out of money. You always talk about your granddad and having that pension. How do I make sure I don't run out of money? That's where during the second half, depending on your situation, most of our clients have that, that's where we insert the types of annuities that provide us that mailbox money. So folks, if you're looking at this, and if this seems to make sense to you, that you should use and enjoy the money while you still can, if you should try to keep your assets to a point where they're not growing at some point, but you're either giving them away to loved ones now while you're alive or enjoying it before it's too late, we need to talk. And we've made this so easy to do. It's called the free 10-minute fiduciary phone call. To take advantage of talking to me about your situation, just log on to TonyWalkerFinancial.com, or anytime you can call us 24/7. That toll-free number is 877-499-9255. Well, we hope you've enjoyed today's program. We look forward to seeing you next week on the Worry-Free Retirement. But you remember, between now and then, if all else fails, You be worry-free and you make it a good one.